The banks have passed on the cash rate hike. Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Once again, we've had a cash rate hike, as we can see on the chart here, heading up to 4%. And, well, the banks, they've passed it on. I can't imagine anyone at all is surprised. It was all expected. We did have some of the banks dropping their fixed rates recently, but, well, we'll see if they do an about-face. So, CBA, Westpac, ANZ and NAB hit customers with rate hikes. Millions of Aussie mortgage holders will be hit with higher repayments after CBA, Westpac, ANZ and NAB all announced they will pass on the Reserve Bank's 0.25% increase in full. This is the 11th interest rate hike mortgage holders have been dealt in the past year, with the cash rate now sitting at 3.85%. May's increase means a borrower with a $500,000 loan, which is a little bit more than the first home buyer average. But, of course, if you're buying in Sydney or Melbourne, your mortgage is going to be bigger than that. With 25 years remaining, we'll be paying an extra $78 a month. Now, you're thinking, okay, $78, what is that? Let's put that in real terms. Can you even fill a tank of petrol with $78 right now? No, last few times I've done it, it's been over $100 each time. What about shopping? I mean, a coffee is costing me $2. Last time I went out shopping just for a little top-up shop, literally coming back from a site visit, stop into a little Aldi, and boom, there goes $100. So it's not even a top-up shop anymore. What about carton of smokes? It's not that. Maybe a pack of smokes with a bit of change left over. Computer game? For $78, yeah, you can still get them for that price, although the AAAs are more expensive. Beer, can you get a carton for $80? Let me know in the comments, guys. It's been a while. If the occasions I go out buying rum, it's like a 6-pack, and that's getting more and more expensive. So, I mean, it's not an amount to be scoffed at. While all 4 major banks have hiked mortgage rates by the full 25 basis points to 0.25%, there are different increases on offer to savers. Rate City Research Director Sally Tyndall said Aussie savers shouldn't assume their bank was passing on the RBA hikes in full. Check that if you're earning an ongoing rate of less than 4.5%, then it's time to switch, Tyndall said. Keen savers are getting ongoing rates of 5%, potentially higher once this latest hike filters through. And we can see here on their chart just how, well, we only really know rates going down, at least our group memory since the GFC. So, and it's boom. CBA home loan and saving changes will come into effect on May 12th. CBA has passed on the 0.25% increase to its 3 main savings accounts. Netbank Saver 5-month introductory variable interest rate has increased by 25 points to 4.5. Youth Saver bonus interest is at 4.5 now. Goal Saver is at 4.4. I mean, at least we're starting to get some decent rates now. You're actually earning money. You're still below inflation, but... So Westpac's home loan changes come into effect from May 16th. Its savings changes from May 12th. Westpac has increased selected savings accounts. Life will increase by 25 points to 4.5. Spend and Save 18 to 29 will increase by 30 points to 5%. eSave introductory rate by 25 points to 4.5. I mean, what frustrates me is all these stupid hoops and bullshit you got to jump through to earn these rates. You know, what happened to good old just sticking your money in the bank and just earning that rate without having to sign your firstborn over to the bank or make so many different transactions while standing on one foot and putting a teapot on your head? So ANZ home loans changes will kick in from May 12th, while its savings changes will be effective May 11th. ANZ is only passing on 0.25% increases to 1 savings account, the Plus Saver. NAB home loan and saving changes will come into effect on May 12th. NAB has passed on the 0.25% hike to both of its savings accounts. Reward Saver now at 4.5. iSaver is now at 4.5. So there we go. That's all they have in there. I was wondering if they'd do a breakdown. Well, let's jump over and have a look at, well, some of these interest rates. So let's see, 6.44 was, I think that was a recent CommBank change. Nope. Let's have a look. Let's simply just increase that by 25 points, because that's probably what we're going to see. What? Oh, hang on. You're looking at 6.69%, so we're seeing an increase of 74.65% coming off the 1.99% increase. So, guys, rates are going up. Let's have a bit of a talk about this one. I can't imagine anyone is surprised, but the good advice from this article is at least to shop around with your savings. I know a lot of viewers of the channel, they'll have offset accounts and they'll be using that to stash their money. But there'll be those of you that have probably fixed with your mortgage rates and maybe have some money just sitting there. Hopefully all the money you've stashed aside from making less repayments, and built up a war chest, place it somewhere to earn some decent interest rates. And there's lots of options for you to shop around. You want to make sure that if you've got, every $250,000 chunk of cash that you have, you spread to different organizations that are protected by the government guarantee, if that's what you're worried about. You want to keep your business and personal banking separate to, well, make them work for your business, to be honest. That's one thing I'd consider. I remember hearing a story from a broker years ago about one of his clients was given a month to get rid of all of his personal banking, all of his business banking, all of his mortgage, his credit cards, everything from the bank he was with, because his business was in the trolley pushcart portion of the airlines, and they didn't want any exposure to that sector. This was after the terrorist attacks, so the banks wanted to minimize their risk. So they minimized their risk by telling you to get lost. They're not your friends, guys. Just remember that, okay? They're just a business like any other. You want to shop around and get the best deal that you can. Don't believe all the advertising, Anyway, let me know your thoughts and opinions on this one. And if you could recommend some savings accounts where you don't need to be the bank's little bitch and jump through 50 hoops, that's kind of what I'm looking for right now, guys. As always, thanks for watching. Like, share, subscribe to the channel. Check out Heise BIM and Heise Does. And if you're a fan and want to support us, you can on YouTube or Patreon. Use our referral links, buy our pocket squares, or call us if you need an architect. Take care, have a great day, and I will see you all in the next episode of HeiseSays. Bye for now.